Hey, everybody. As many of you may have noticed, news feeds this week have been flooded with headlines about some dramatic shift in the housing market and the way commissions are paid. Last week, the National Association of Realtors, for the rest of the conversation, I'm going to be referring to them as NAR. They announced a settlement in the Sitzer-Burnett case that would take effect in July. At first glance, sellers are probably out there thinking that, great, why should I put the bill for a buyer's agent? Buyers might be thinking, great, this is going to help make homeownership more affordable. And for those hoping that, this outcome will effectively render transacting real estate essentially free, protect consumers, and make homeownership affordable once again. It's my understanding that the settlement does none of those things. So, there seems to be some poor understanding of what's really going on. It's not really being helped by the lazy reporting and clickbait articles that are flying around, especially over the course of this last week. I've been frustrated myself with similar types of articles talking about a bubble in the housing market. It's this ominous bubble. Meanwhile, prices are going up and up and up, and there's probably the people sitting on the sidelines that aren't getting the information that they need to make a good decision. So, and it's kind of left people like me and you giving economics and history lessons about the last housing market crash and what we're seeing now, to buyers who are, just seeing articles about high interest rates and market crashes. So, I kind of see something similar going on here. And I think it's really important that people educate themselves and understand what's going on, because the housing market plays a key role in our economy. That's, really the point of what I wanted to kind of get out there today. So I thought I'd do the journalist job for them on this NAR news and interview an actual expert. So Matt Bruns with Berkshire Hathaway Select Properties is here with me today. And he's been in the industry for about 10 years now, and has been closely following the NAR settlement since the beginning. I've been hearing him talk about it for months. So I thought who better to help explain it to kind of the masses than Matt. So Matt, thank you for joining me.
Yeah, thank you for coming up with this idea and putting this together. Like you alluded to at the beginning of your introduction, I think that there's a lot of news stories out there about what's going on with the real estate market, and some of the headlines and the talking points are slanting the conversation in a direction that I think is misleading and inaccurate. And, unfortunately, as it is with a lot of mainstream media headlines, it's unfairly boiled down, and people make big decisions based off of that information. And so I was eager to hop on here with you and just kind of boil some things down and get things reported a little bit more accurate. So thanks for having me.
Absolutely. So first question, why do you want to take all of our money? No, I'm just kidding. So we'll start easy. What is NAR?
So NAR stands for National Association of Realtors. It's the national level trade association for realtors, the realtor industry. So what's a realtor? What's a real estate agent? So realtors are not just real estate agents, licensed at the state level. They're real estate professionals that commit to an extra level of code of conduct, ethical business practices, commitment to upholding fair housing laws, and maintaining extra continuing education requirements beyond what their state licensure office requires. Aside from the national level, the National Association of Realtors, there's also state level associations and local associations. So in Missouri, we've got Missouri Missouri Realtors, and then in the St. Louis metro area, there's St. Louis Association of Realtors, there's Southern Gateway in the Jefferson County area, there's St. Charles, there's East Central out in Lincoln County, and then there's multiple on the Illinois side as well. So aside from, the standards of professionalism, the associations of realtors, they also lobby for pro-property ownership, political efforts. So taxes on the sale of real estate property, down payment assistance programs, flood insurance programs, things like that. They hear complaints and disputes against their membership, so against realtors, as well as complaints and disputes amongst the membership. They create and update all the sale contracts and forms that we use, so we know that those sale contracts and forms are, current with modern business practices and modern issues, as well as consistent with state and local real estate laws. So the Association of Realtors, they cover a lot of things.
Kind of similar to our MBA.
Yeah.
So what was the settlement proposal that was all over the news?
So the settlement that was announced last Friday, it's to settle litigation over claims brought forth by class action plaintiff home sellers over real estate commissions. And that was between the National Association, state and local associations, some MLS systems, and many brokerages and their members. The proposal that was basically this proposed settlement announcement that came out Friday, it's basically that commission offerings for cooperating brokers, aka buyer's agents, would no longer be required when a listing agent is inputting a listing into the MLS. And posting that cooperating commission, so the commission for the buyer's agent, would no longer be allowed to be displayed in the MLS. So basically, when a seller is sitting down with the listing agent, they agree upon a listing amount, listing details, and they want that listing to go into the MLS, that seller is no longer required to offer some sort of compensation to cooperating brokers, aka buyer agents. And then when listing agents are uploading that listing into the MLS, they no longer have to put that cooperating commission into a data field within the MLS. And then when buyers and buyer agents are sifting through the MLS, they're no longer going to see a field that displays a cooperating buyer agent commission. On top of that, in this proposed settlement, buyers and buyer agents are going to be required to use, agree to, and sign buyer agency representation agreements ahead of time before entering into basically, buyer agent activities. And then aside from that, NAR is going to pay out $418 million to these plaintiffs over a 4-year period. So when you see the headlines that said, gone are the days of the 6% commission, or a realtors agree to slash commissions, that's not really an accurate portrayal of what's going on here. In this proposal, basically just when a listing agent is, signing a listing agreement with the seller, that seller no longer has to commit to some sort of buyer agent cooperative broker commission in order to get it into the MLS. And so now also to that point, again, the inaccurate headlines, sellers are still going to have the right and the option to offer commission to cooperating brokerages, so buyer agents, and listing brokers will also still maintain the right to share a portion of their total commission they take on that listing agreement with cooperating brokerages, aka buyers agents. So.
Gotcha. So, what was the settlement for? Or why was there a settlement? Why did this all come up?
So over the past few years, there have been a number of class action lawsuits brought by home sellers in a bunch of different states, alleging that there was a conspiracy amongst the National Association, MLS system, state local associations, realtors, and the brokerages they belong to into fixing commission rates. So perhaps the biggest and most impactful of these class action lawsuits took place here in Missouri. The trial was actually last fall in Kansas City. And at the same time, aside from these class action lawsuits, for the better part of the past couple decades, the Department of Justice, the Federal Trade Commission, and the Consumer Protection Bureau have been investigating real estate business practices, the policies and procedures, and multiple times over the basically the past 2 decades have demanded that the real estate industry, update and change their business practices, for the betterment of the general public and transparency and efficiency. And so this is just basically, those class action lawsuits and, continuing government regulatory investigation, combining all at the same time to push forward some business practice changes for the real estate industry.
Yeah, it's interesting. Like, the changes that were in the imposed on the mortgage industry after the housing crisis were, predominantly positive in terms of consumer protection, and put in place some very important guardrails, which are, the reason why, the aforementioned ominous housing bubble didn't happen when inflation spiked, because the right people are in the right homes and supply and demand. I mean, it's all kind of connected, honestly. But so what's the timeline on the settlement?
So what was included in the release on the settlement and, the follow-up communication regarding this settlement from Friday, mid-July is when they are targeting for these proposed changes to go into effect. Now, it's important to point out that this settlement has not been court approved yet, and in follow-up communication from the National Association of Realtors, they've made it clear that it's possible that this court approval process could take months to get through. And then, last point to include is the Department of Justice has not officially weighed in on this settlement yet either, and that is important to point out because, like I mentioned before, there's been, lots of these lawsuits in a variety of different states over the past few years. And there have been, previous announced settlements the Department of Justice has weighed in on and said, no, not good enough. So remains to be seen, what the Department of Justice thinks about this, as well as whether or not this will be approved and when it will be approved by the courts.
Interesting. So, people ask me, why couldn't they just roll it in their loan amount? I personally don't see how that can work because there's no collateral. I can't foreclose on the services that you rendered years ago when somebody doesn't pay their mortgage in a couple of years. So to me, it's almost like it seems like there's an element of buck passing that's going on here, and my fear would be that it gets passed to consumers in the form of additional closing costs, especially first-time home buyers that are already struggling to afford the down payment and the closing costs and facing rising prices. So with all that said, assuming the proposal is accepted, what does this mean for buyers, both first-time and move-up?
So I guess first and foremost, start off with that buyer's agency representation agreement, documentation, paperwork, contract, whatever you want to call it. If you bought a house in the past and you never signed one of those with your buyer's agent, or maybe you waited to sign one of those until you went under contract, that's going to change. So going forward, buyers and their buyer agent representatives will have to sit down, do a buyer consultation, talk about these representation agreements and commission policies, get those things assigned and agreed to upfront before they engage any sort of buyer agency representation activities. So like, showing properties, calling listing agents on their behalf, trying to negotiate things, that kind of stuff. Secondly, when you are looking through the MLS, your agent, if you're buying a house and you have a buyer agent, they're not going to know right off the bat if or how much commission is being offered for selling that house. And your agent's going to have to do a little bit of extra work to figure out if there's any commission being offered for buyer's agents on this particular transaction, and how much is being offered. And so lastly, you may have come across listings in the MLS where the seller and the listing agent are not offering any sort of commission to your buyer's agent. And in that situation, if you want your agent to help you with this transaction, so helping you with the contract, helping you negotiate, guiding you through the process, looking out for you, making sure the listing agent and or the seller isn't trying to take advantage of you, you're going to have to figure out some way to pay your buyer's agent. So that could come in the form of sale price renegotiations. It could come in the form of closing cost credits. It could come down to you, the buyer yourself, having to pay that commission yourself. And as Andrew, you were talking about before we went into this conversation, there are current rules and restrictions if you're using a loan on what you are allowed to roll into that loan, how much of your money in your bank accounts you're allowed to deplete in order to buy that house. Amongst agents, a big talking point or point of concern is VA buyers. VA buyers aren't allowed to pay any commissions. So how is that going to work? So it basically is going to be, you're going to have to sign buyer agency agreements up front. Your agent's going to have to do a little bit more work to figure out if there's any commission being paid to them or not, and how much. Whereas the old way of doing it, that commission is posted in the MLS, the agent, they see it right there. It's actually distributed to sites like Zillow and Realtor.com and those types of sites. So you, the consumer, as you're scrolling through listings, you can see that stuff too out in the general public. So your agent's not going to be able to just get that information right there in front of them. And then lastly, in situations where there's not a commission being offered, if you want your agent to continue to represent you on the buyer's side, there's going to be some creativity or just outright total assumption of that buyer agent commission on the buyer.
Yeah, it's just really interesting. Like, my side of the coin in the mortgage world is so regulated. So there is so much that has gone into it. And like I mentioned, mostly positive, but it just seems like there's a lot that's going to be up in the air, and a lot more negotiation going on, and some opportunity for things. Like for instance, one of the things that was happening pre-08 was there were lenders that were getting incentivized to promote one product over another, steering, things like that. I am not allowed to change my commission in any way to land a deal. I can't do it. So if your lender is giving you some sort of concession on your loan to try to get your business, that comes out of the company's end, not my end. It's an environment of fostering people to do the right thing, So it's this whole thing's just interesting to me in that respect. So not too much, more, but assuming that the proposal is accepted, what does that mean for sellers?
So really on the seller side, it just means that they're going to have the choice of getting their listing in the MLS without offering any sort of cooperative compensation to buyer's agents. Whereas before, in order to get it into the MLS, you had to offer something. It could be $1. It just couldn't be zero. So it's just going to be left up to them now, between them and their listing agent, on if they want to put that listing in the MLS, do they want to offer some sort of compensation, and what do they want to do in order to try to get the offer terms that they want from buyers interested in buying their property in whatever market conditions they're in. So they'll have the choice now.
I mean, if you think about the hotter, more desirable markets to get into, those folks might might just say, well, you figure it out, you know.
Yeah.
That's it's like, okay. And that kind of further drives the haves and have-nots of the world into, you know,
Yeah.
further apart, in my opinion. But
Yeah.
so is there any truth to the notion that home prices might go down because of this?
Well, Andrew, I don't have a crystal ball, but it's very hard for me to imagine that prices are going to go down. Um, uh, Under current market conditions, we just have lopsided supply and demand. Despite interest rates going up, interest rates going up. There are still so many people out there that want to buy and need to buy. That prices have continued to go up. Even in situations where, sellers are paying less, on their settlement statement and commission because they're not offering out the buyer's agency commission and they're only paying for their listing agent. It's hard for me to believe that those people are just going to decide to sell their houses for less. The comps are out there at here. You mean to tell me that people are all of a sudden just gonna be like, oh, well, the good is my own heart, I'm gonna sell it down here. There have been online listing platforms out there for a long time that don't involve nearly as much commission. Maybe they are an online limited service model. Those sellers aren't selling for like they're not trying to sell for less. I would say, if anything, they're trying to push the envelope on what they can get. Same thing with for sale by owners who, refuse to pay a commission and engage with real estate agents. They're not trying to sell for less. They're still, trying to push the envelope and max out the potential sale price. And then it just kind of comes down to if home prices are going to go down, all things considered, it's going to be because buyers can't afford to buy a home anymore and have any sort of representation. We talked about the mortgage restrictions. On top of that, I think Zillow's report from earlier this year was like nearly half of first-time home buyers required down payment assistance from a family member or some sort of, family money. The past year, really, we've been talking about how home affordability is an all-time low. If prices are going to go down, given our supply and demand situation, I think it's going to be because buyers continue to want to have some sort of representation. They don't want to go in unrepresented, but it would require them not being able to buy the houses on top of not being able to, afford an agent. So that's what it'll take for prices to go down. Is that what we wish on the American people? At least not me. So
I 100% agree. Like that's the only way I can see them going down is that people just can't afford it anymore. I mean, like when I do loans for first time home buyers, especially even move up homes, it's rare that they're putting down, you know, uh, serious money. It's sometimes that additional 2% of funds that they're going to have to come up with is that there's nowhere to get it. Like you mentioned earlier, ability to repay, factors that we have to take into concern, and reserves and all sorts of things like that people just don't think about. So you mentioned
you made the point earlier. The higher price points, the wealthier are going to be able to offset the change in the system and the lack of a buyer's agent being paid out of the listing brokerage's commission that they agreed to with the seller and being paid at the closing table off the settlement statement. It's going to be the lower income to middle range that are going to be, unfortunately, bearing the biggest impact on having to pay for their own agent where they find themselves in situations where they have to pay for their own agent.
Yeah, we talked about doing the right thing, incentivizing people to do so. A lot of times that's why we have these consumer protection laws and regulations and things like that. Is because somebody's got to look out for the have-nots, as well as the haves. So, it's all very interesting. But,
Yeah.
last question, and you touched on it a little bit, like, so we're in such a digital age, but I am a firm believer, like, there's so much that goes into critical thinking wise, and, you know, advocating for your clients and things like that, that I just don't ever see being like like an AI lender probably isn't a good idea. If you click in and you want the cheapest rate, or I'm sorry, like the cheapest payment, well, that loan program, or the information that system is going to relay to them is going to be what they ask for, not taking a whole picture of everything and explaining and educating. It's
Yeah.
two different things: order taking versus thinking for your client and trying to help them understand. So, you kind of touched on it, but why do people need an agent at all in this digital world?
Yeah, I mean, I guess I'll rehash some of the things I've already addressed. First of all, you want someone who's going to stick up for you and look out for you. So helping with negotiating strategies to help win the multiple offer battle, research the data to tell you whether it's a fair deal or not. Is it likely going to appraise or not? That's a big issue with people writing in, or waiving appraisal writers, writing in appraisal gap verbiage. Big issue in St. Louis is understanding the municipal and neighborhood restrictions and, occupancy things, advising on inspection repairs and permit issues. And are there things that, the seller side are trying to hide from you that they're not disclosing? Like even just like an example from my personal business on the listing side, I had a situation about a month ago on a listing where, I'm managing multiple offers and there's an open house going on at the same time. And we were about to go under contract with the first offer we got, and then we got a second offer, and it was a lot of money that was different. And in a matter of minutes, I'm calling multiple different people, getting an offer rescinded, like just in the nick of time. And that netted my seller a ton of money. And it's all because I was just sitting there, like, manning the phone, watching my email, texting, phone calling back and forth. Yeah, that was tens of thousands of dollars of difference that it made for my seller. So that's just an example, someone who's sticking up for you and looking out for your best interest. The workload of a good realtor is way more than just, plugging stuff in the MLS and opening doors. Secondly, you were talking about the digital age part. There's many different real estate business models that have, and like tech platforms too, that have come and gone, that attempted to replace what the like agent system does. So none of these business models lasted, or maybe the businesses are still around, but they pivoted on their business model because they were never able to successfully come up with a way of displacing agents. So now I say that, but the settlement goes through, I'm sure that there will be new creative business models other solutions that pop up and are promoting their services. But if we just look historically, time and time again, the majority of Americans continue to hire an individual local real estate agent as opposed to one of these other solutions or real estate platforms. And then the last thing on the digital part, and again, to your credit, you were talking about this a little bit too, on the data. Good tech needs good data. Bad data in means bad data out. So agents carry a lot of the burden in collecting that data, verifying it, uploading it, and also paying for all the costs of maintaining the systems that distribute that data. So same thing with some of the tools that are free for consumers to use on public-facing websites, like just going back to Zillow, for example, again. Those features, those tools exist because they were created for agents paid for them, agents use them, and that's why they are so useful and helpful as things on a public-facing platform that the consumers can use for free. And then on top of that, there's a lot of things in the real estate transaction that are not digitized yet. It still requires a human to get the paper, scan it, sift through it, actually do some sort of physical work. And, that could be just like old subdivision restrictions or road maintenance agreements. A lot of that stuff is not digitized. It still is like its original document from, the 1950s. Or even occupancy processes. Again, I was griping about the occupancy processes here in St. Louis. There are some municipalities where it is not 21st century process. So how does an online platform, digital age platform, how do they replace the actual human element of doing all of that work? They're tech platforms. If they're going to replace agents, they're going to have to figure out a way to, get all the data, get it accurate, and then address those parts of the real estate transaction that still require a human to do some physical work.
Gotcha. Yeah, no, those are all great points, and it's just and then kind of like you mentioned, there's the ability to kind of juggle different offers in different situations, and net your seller potentially a lot more money, or who's going to show up to let the buyers that don't have agents in? Are you going to give them all keys to your house? Are you going to go on every listing appointment? Are you going to there's so many questions, and I could almost see like a tiered thing, maybe like if your house is $1 million plus, this is the question, maybe, I don't know, there's people that will figure it out. But for now, I think it's just really important for people to understand, a lot of people don't even know that the seller pays for the buyer's agent, it's until they go and buy a house. And it's something you never really think about. So, it's going to take, people like me and you and others, explaining what they're going to get for their dollar, when they choose you to represent them on the buyer or the seller side. Because if you, if you want champagne sales, you're gonna, and you're only willing to pay for a beer budget, what kind of advertising, what kind of, I think you're almost shooting yourself in the foot on the seller side by, starting to cut that, cut the commission. So
yeah. And I mean, we realtors, we can't allow ourselves to get into situations where we're holding deals up over commission, and steering people over commission. But the way that the commission model works with the buyer's agency commission, going to or coming from the seller side of the transaction. So the current model, basically, seller, listing agent, they agree on, okay, back to the headlines, the 6%. And then that listing agent is saying, of that 6%, I'm going to give a portion out to the buyer's agency. The idea is listing agent can only do so much to bring a buyer. If I'm giving up a chunk of my commission to another agent, it'll be quicker to get another buyer in here. That's kind of how the whole system originated. But you talked about the lending restrictions and things like that. A lot of these things, they all combine to give some efficiency to the marketplace to allow people to buy and sell. And again, back to the efficiency, limiting what's involved in those loans, gives some more security to packaging those loans on the secondary mortgage market, and limits the risk so that we're not getting into a 2008 situation. And the secondary mortgage market, it's a very unique American thing. That's what gives liquidity to the front end banks and mortgage lenders, so that way they can keep doing that stuff, and also allows them to give those 30-year fix, which is another, uniquely American thing. So that's another kind of just, again, I could probably talk for hours about it, but the comparisons to other countries and their agent system and their commission system versus the United States system, we're not talking apples to apples, unfortunately, but that's what it is.
A weird ecosystem we have in
Yeah,
our world.
yeah.
Well, Matt, thank you so much. You know, like you said, we could probably go on all day, but uh, you know, I really just wanted people to get an understanding from somebody who I probably would regard as the most educated person I've heard talk about this on the topic. So thank you.
Thank you.
And you know, if you guys have questions, buyer seller side, obviously, you'll reach out to Matt. He's incredibly knowledgeable and really cares about his clients. So thanks for joining me, and thanks for watching. Feel free to tag a friend, send a link to a friend, or drop a comment or a like. But thanks everybody.
All right. Thanks, Andrew.